Hello everyone and welcome back to the channel, Finance with Ian. My name is Ian and today we'll be going over why the market hasn't been as strong in the past few months as it has been over the course of 2020. I'll give you guys reasons as to what I think is going on with the market and I'll also let you guys know what I'm doing as of right now in the market. So make sure to drop a like to push this video to a larger audience, subscribe to stay tuned for more financial videos in the future, and let's get into this video. So, as you guys have probably seen in the news, the Dow and tech stocks have been falling off. Some people are saying that this sell-off is happening because treasury yields have hit an all-time high. Stocks like Apple and Tesla have fallen, and Microsoft has been trading flat these past few days. So the 10-year treasury yields have risen to 1.77%. And while this happened, the Dow dropped 0.3%, SPY dropped 0.6%, and the Nasdaq is down 1%. So in my opinion, I think the stock market pullback has to do with treasury yields and a few other factors. And in fact, I didn't find this out till recently, but stocks and bonds have an inverse relationship. Now, there are several factors behind why this relationship is as it is, but here's what I believe is the strongest reason. Whenever you invest in the stock market, you're going for a return that's usually between 7 to 10% each year, but it's also kind of risky because the stock market can always pull back or dip at any time. Hey, even the company you're investing in could go broke and you lose that investment, but with the chance of higher returns also comes the chance of risk. With bonds, however, you're guaranteed to have some return, however, the returns are way lower. So when the stock market starts to go up, bond yields begin to go down. And inversely, as the relationship is called, when the stock market begins to go down, bond yields go up. The reason is simple. People always want a return on their money, so they're going to put the money where it yields the most interest. So say the stock market isn't looking too good or it's looking kind of shaky, they're going to put their money in the bonds so they can guarantee some returns. So far, I have one prediction as to why the stock market is being pulled back, the prediction about bond yields, and I also have another one. And my second theory is, as this illness begins to go away as we get vaccines, the Fed is starting to raise interest rates and go back to the levels we were pre-illness. With rising interest rates means it won't be as profitable to borrow money to invest into the stock market or trade on margin. When this happens, less money is starting to go into the stock market and stocks begin to slow down their growth and some even decline. The confidence of investors also goes down, knowing that there's not as much money being pumped into the market. And with interest rates rising again, people also realize that they better pay down the debts first instead of investing in the stock market like they were before. And even though there's been talks about the fourth stimulus bill coming into play, investors are still worried that the government bailout is over and there's going to be no extra money going into the stock market like there was. So once we go back to the levels that we were at pre-COVID, I think the stock market will really start to flatten and slowly go up. I also think pullbacks like these are pretty healthy for the market. These small recessions really keep everything honest, because if there were days where the stock market kept going up by 10% or 14%, eventually that would cause worry. It's not physically possible for a market to grow that fast. So those are the two biggest reasons I think why the market has been flat or trading sideways these past few months. So now that I gave you guys my reasons as to why the market's been flat or down, I'll let you guys know what I'm doing about it. Hold your stocks. I can't emphasize this enough, don't sell them off just because there's a sell-off. The stocks will recover and the US stock market is a pretty strong one. In fact, use the red days to buy in. I'm currently holding on to a lot of Palantir, Tesla, and Apple. Even though all three of those have gone down a lot in the past couple of months, I'm still buying into them when I can. In fact, ARK Invest said by 2025, Tesla will be worth $3,000. And in fact, reports have just resurfaced that Tesla and Toyota are rekindling their partnership to produce SUVs. Now this is incredible news because they'll be producing an all-electric SUV. Tesla will be offering the electronic platform and software, while Toyota will be building the actual body of the car. I think this partnership will really reflect on Tesla's stock. Another stock that I keep buying is Palantir. It's currently around $21 and I think that's a great price to get in at. I think it's really undervalued right now, so I've been buying in. Long term, this is going to be an incredible growth stock. I've also been hanging on to my Apple shares and buying more when possible. Apple is one of those big companies that have already been established and they have the potential to do a lot more now. Not only that, but their stock also pays dividends. And finally, the last thing I'm doing in the small pullback is buying more in my Roth IRA. In fact, just a couple days ago, I bought another share of SPY, also known as the S&P 500. My philosophy is just to hold long term, especially on an ETF that's as good as the S&P 500. In fact, there's a study that showed that if you were to hold a stock over the course of 20 years, you would never lose any money. So buy and hold. This is the perfect time to show that you've got real diamond hands. There's a common saying that's thrown around that I like to say. The best time to buy a stock was 20 years ago. The next best time to buy a stock is right now. It's never too late to get into the stock market, and right now is the best time to buy when it's red. So I hope this video gave you guys some reasons as to why the stock market was down, and I hope you guys were able to learn what to do. So with all that said, thank you so much for watching the video. Make sure to drop a like to push this video to a larger audience, subscribe to stay tuned for more financial videos in the future, and I'll see you guys later. Thanks for watching.